Hey everyone, ready for another deep dive with us?
Always excited to dig into some market trends.
Well, get ready because today we're talking potential stock splits in 2025.
Oh, an exciting topic for sure.
It is. And yeah, so let's dive in. What I find really interesting is that the article is focusing on companies likely to split from a position of strength, those with lots of cash and a bright future.
Right, that's key. It's a good sign for investors when a company splits because it often means they're expecting continued growth and want to make their stock more accessible.
Okay, so let's break it down.
Sure.
What exactly is a stock split and why do companies do it? Some of our listeners might need a refresher.
Absolutely. Imagine you have this really valuable painting, but you want to sell smaller portions to more people.
Okay, I'm following.
A stock split is kind of like dividing that painting into smaller pieces, making it more affordable for individual buyers. It doesn't change the total value of the painting, or in this case, the company.
But it makes it more accessible to a wider range of investors.
Exactly.
I like that analogy.
Yep,
It's like slicing up a pie. Everyone gets a smaller slice, but you still have the same amount of pie.
precisely.
So let's look at the first company, Netflix.
Netflix is a really fascinating case. They've already split their stock twice, once back in 2004,
Oh, wow. Yeah.
and then again in 2015, both times after periods of significant growth.
And this year's been no different. They've had incredible growth, something like 69% year to date,
I
right?
got it.
And their stock recently hit an all-time high of $841.
With over 282 million subscribers worldwide.
Talk about dominating the streaming market.
Absolutely. But, they weren't always the streaming giant they are today.
That's true. Their journey from DVD rentals to the global streaming powerhouse they are now is pretty remarkable.
It really is. Their ability to adapt and innovate is a big part of their success story.
And let's not forget how their initial DVD subscription model completely disrupted the industry.
Oh,
It
yeah.
was a real game changer. I mean, it played a huge role in putting Blockbuster out of business.
It did. They understood and capitalized on changing consumer trends. Now, with their stock price approaching $1,000, a third split wouldn't be surprising at all.
Right, it'd be kind of like what we saw with Chipotle earlier this year, that 50-to-1 split.
Yeah, that's a good comparison. Chipotle split made it accessible to a much broader investor base, and Netflix could see similar success.
Chipotle split was fueled by strong brand recognition and big expansion plans. Netflix certainly has a global brand that could drive that same kind of post-split success. But before we get ahead of ourselves, let's move on to the next company, ASML Holding.
All right. ASML might not be a household name like Netflix, but they play a crucial role in the tech world. They practically have a monopoly on a technology called extreme ultraviolet lithography.
EUV.
Yep,
No.
EUV for short.
Okay, I'm going to be honest. EUV sounds pretty complex.
It is.
What exactly is it, and why is it so important?
Well, EUV lithography is essential for manufacturing the most advanced computer chips. The chips that power everything from NVIDIA graphics cards to AMD processors.
So the brains behind a lot of our technology today.
Exactly.
Wow, so even though most people haven't heard of ASML, they're a critical part of the semiconductor industry.
They are. Companies like Taiwan Semiconductor Manufacturing, one of the biggest chip makers in the world, rely on ASML's machines to create these powerful AI chips. We wouldn't have the same level of technological advancement without ASML.
That's incredible. It sounds like they're in a pretty solid position in the market.
They are, but their situation is also a bit more complex than Netflix's.
In what way?
Well, while their stock did hit an impressive $1,110.09 back in July,
Uh-huh.
it's actually dropped about 40% since then.
Wow, that's a significant drop. What's going on there?
Well, there's some uncertainty surrounding their future, particularly with potential political impacts on their business in China.
Oh, right, yeah.
ASML relies heavily on the Chinese market, and any restrictions on trade with China could seriously limit their growth.
That makes sense. Political factors can definitely have a huge impact on a company's performance. And didn't they already have a few stock splits in the past?
They've actually had 5 stock splits, and some of them were reverse splits.
Reverse splits, what does that mean?
So instead of dividing shares to lower the price like a traditional split,
Right.
a reverse stock split actually combines shares to boost the price.
Interesting. So it's almost like the opposite of a split.
Right. It's a less common tactic, often used by companies after a decline, and it could suggest that ASML is trying to regain some stability. It's something to watch closely as we think about their potential for a split in 2025.
So we've got Netflix, a potential split candidate with a strong brand and global reach, and ASML, a company with a more complex situation due to political factors and past splits.
Exactly. And that brings us to our third company, ServiceNow. This is a company that's been absolutely crushing it. Their stock is up over 3,000% since their IPO in 2012.
Wow, that's incredible growth. What's their secret?
Well, ServiceNow is a leader in providing cloud-based workflow platforms for businesses. They help companies streamline their operations, improve efficiency, and adapt to this ever-changing digital world.
So they're tapping into the power of digital transformation.
Yeah.
That's a huge market with so much potential.
Absolutely. And they're not just resting on their laurels, they're constantly innovating, diving headfirst into the world of AI with their new AI agents.
AI agents, that sounds intriguing. Tell me more about that.
Think of them as customizable AI programs designed to automate specific tasks and achieve certain goals for businesses.
Okay.
It's a great example of how ServiceNow is leveraging AI to create even more value for their customers.
It sounds like they're at the forefront of innovation. And with their stock recently hitting an all-time high of $1,061.66, there's a lot of buzz about whether they'll finally do their first ever stock split in 2025.
It's definitely a possibility. Their recent Q3 2024 earnings were incredibly strong, with a 27-cent EPS beat
Whoa.
and a 22.2% year-over-year revenue growth, bringing them to $2.75 billion.
Those numbers are impressive.
Yeah.
It'll be interesting to see if that momentum translates into a stock split. But before we get too excited, it's
Yeah.
important to remember that stock splits are just one piece of the puzzle.
Right.
There are so many other factors to consider when evaluating a company's potential.
Absolutely.
In part two, we'll take a closer look at those other factors, things like the competitive landscape, global events, and new technologies. Stay tuned.
Can't wait.
We just took a deep dive into 3 companies that MarketBeat predicts could split their stock in 2025.
Netflix, ASML Holding, and ServiceNow.
Right. Each of them has such a fascinating story, and each is in a unique position in its market.
Absolutely.
But as we mentioned, stock splits are just one piece of the puzzle
Right.
when it comes to, evaluating a company's potential.
Yeah, you got to look at the bigger picture.
You got to get
The global landscape, competitive forces at play, emerging technologies.
those are all really important. So let's start with Netflix. They're the undisputed king of streaming right now.
The king, but
But the competition is getting fierce.
oh yeah, you got Disney Plus, EA, Apple TV Plus,
HBO Max.
all vying for those subscribers.
Creating some incredible content, too.
For sure. And let's not forget those international streaming services too.
Oh, good point.
That global market is so diverse now.
Yeah.
And Netflix's success is really going to depend on their ability to appeal to a wide range of audiences worldwide.
That's a good point. It's not enough to just be the biggest player anymore.
Yeah.
You have to stay ahead of the curve.
And adapt.
Constantly adapt to those changing viewer preferences.
Mhm.
Plus, there are other things, external factors to consider that could impact their ability to produce new content.
Oh, like what?
Well, like the writers and actors strikes.
Oh, of course, right?
Those could have a significant impact on their production schedule.
Yeah, delays in new shows and movies could lead to, like, subscriber churn.
And that would affect their stock performance.
Definitely.
It's a good reminder that even a company as big and as dominant as Netflix is still vulnerable to forces outside of their control.
It's all interconnected.
It really is. Speaking of interconnectedness, let's shift gears to ASML Holding. They're basically the linchpin of the whole semiconductor industry with their EUV lithography technology.
Right, which raises some interesting questions.
Like what?
What happens if there are, like, supply chain disruptions?
Oh, that's a good one. Or what if,
The competitor comes along.
right, with a viable alternative?
The EUV.
Those are some big what-if scenarios.
It wins.
And like we talked about earlier, there's that whole political landscape, too, that adds another layer of complexity to their situation.
Oh, absolutely. I think the MarketBeat article even specifically mentioned, the U.S. political climate and its stance on China.
It did. It mentioned the potential impact.
Yeah. ASML's business with China is significant. Any restrictions on trade with China could really impact their revenue and growth potential.
That makes sense. It's a delicate balancing act for them.
It is navigating geopolitical waters.
While trying to maintain their edge.
Their technological edge.
Exactly.
Likely.
It sounds like they're walking a tightrope.
Kinda, yeah. On one hand, they have this amazing technology that everyone needs, but then they're facing potential roadblocks from political tensions and possible competition.
It's a tough spot to be in. It makes you realize how a company's success isn't just about having a great product.
Right.
It's about navigating this complex web of factors.
That are constantly changing.
Constantly changing, yeah. Which brings us to ServiceNow. They're riding that wave of digital transformation.
A big wave.
But technology moves so
It's at
fast.
lightning speed.
What happens if their platform becomes outdated? What if there's a new, more disruptive technology that comes along?
That's a challenge for every tech company, staying ahead of the innovation curve, right?
It really is.
What's cutting edge today might be obsolete tomorrow.
So true. But it seems like ServiceNow is trying to get ahead of that with their investments in AI.
Yeah, their development of AI agents shows they're thinking ahead,
Uh-huh.
really trying to anticipate their customers' needs, their evolving needs.
But even with that, they're still not immune to, economic forces,
Right, macroeconomic factors can affect the whole market.
not just individual companies.
Things like inflation,
Interest rate.
potential recession, they all have a ripple effect.
It's a lot to think about. I guess the key takeaway for listeners is don't get caught up in the hype.
Right. Do your research, understand the risks and the opportunities.
Make informed decisions.
Informed decisions, yeah. Look beyond just the headlines and try to understand the broader context.
Great advice. Don't just chase the trends.
Our hot stock tips. Think critically.
Assess the big picture.
Remember, the market is a marathon, not a sprint.
So true. Stay informed, stay adaptable, and remember that the market's always evolving.
What's hot today?
Might be old news tomorrow.
Before we go on to part 3, where we'll explore some potential dark horse candidates for stock splits in 2025.
Ooh, I like that.
I want to take a moment to reflect on what we've learned so far
Okay.
from this Market Beat article.
Okay, yeah.
It's highlighted some really interesting trends.
Like what?
The fact that companies like Chipotle, NVIDIA, and Broadcom,
All did stock splits this year.
yeah, that speaks volumes about the accessibility of the stock market.
It does. And Walmart's 3-for-1 split, their 10th overall, is another good example.
It's a reminder that stock splits can be a recurring strategy for companies.
To keep a broad investor base.
It's not a one-time event, it's part of a long-term growth plan.
It's also fascinating to note the different reasons behind these stock splits.
Oh yeah, definitely.
Some companies, like Chipotle and Walmart, they aim to make their shares more affordable.
Right.
But then you have NVIDIA and Broadcom who split to adjust their stock price after big growth.
It just shows that every company has its own story and its own rationale.
And understanding those nuances is key for making good investment decisions.
Absolutely. Don't just follow the crowd.
You got it.
Understand the companies and their circumstances.
Okay. Now, before we move on to those dark horse candidates in part 3,
Yeah,
I'd like to leave our listeners with a thought-provoking question.
I like where this is going.
So, considering the increasing accessibility of the stock market and the rise of retail investors, how might this influx of new participants shape the future of the market? How will they influence investment trends?
That is a great question. It really makes you think about the market dynamics
It does.
and the role of those individual investors.
We'll definitely be thinking about that one as we head into part 3 of our deep dive. Stay tuned. All right, welcome back to our deep dive. We've been talking about potential stock splits in 2025.
And we've covered some interesting ground with those companies from the Market Beat article.
Yeah, Netflix, ASML, ServiceNow.
Fascinating stuff. But now,
Now it's time to have some fun.
let's get speculative.
Right. Let's venture beyond the article and see if we can spot some companies.
Some hidden gems.
Yeah, those companies that might not be on everyone's radar yet, but could be primed for a split in the future.
Okay, I like it. What signals should we be looking for?
Well, I think we want companies with strong growth potential, a stock price that's been steadily climbing, and maybe even a history of previous splits.
Makes sense. And we got to think about those industries experiencing rapid growth, maybe some disruption.
Oh, definitely. Those trends shaping the future, artificial intelligence, renewable energy, electric vehicles, the metaverse.
Lots of potential there.
What about quantum computing?
Quantum computing. Oh, no, that's a fascinating field. Still in its early stages, but it has the power to revolutionize so many industries. Medicine, materials, science.
Exactly. And there are companies out there developing this tech.
Like IonQ and Rigetti Computing.
Those are good ones.
They're still pretty small, but their stock prices have been volatile with some big spikes in growth. And if quantum computing really takes off, like those experts predict,
Oh, they could see huge valuations.
making them perfect candidates for a split down the road.
So we've got quantum computing on our radar. What other sectors are you watching? What about companies focused on, like, sustainable agriculture, vertical farming? With the world population growing and climate change, We need to find ways to produce food more efficiently and sustainably.
I'm with you on that one. And there are some real pioneers in vertical farming, like Plenty and Aero Farms.
Yeah, I've heard of those.
They're developing these indoor farms
Really?
using hydroponics and LED lighting. They can grow crops year-round, no matter what the weather's doing outside.
It's like something out of a sci-fi movie.
It is. Growing food in skyscrapers. They're addressing a crucial need, and if they can scale successfully, their growth could be huge.
Okay, so we've got quantum computing, vertical farming.
What else?
What about personalized medicine or gene editing?
Ah, now you're talking. Companies like CRISPR Therapeutics and Intellia Therapeutics are developing groundbreaking therapies in those areas.
Those are some heavy hitters.
Yeah. Gene editing especially, it's such a powerful tool, curing diseases, improving human health,
They're really pushing the boundaries.
and their stock prices reflect that. We've seen some big fluctuations, so investors are definitely paying attention.
So we've got quite a list of potential stock split contenders.
From quantum computing to food and healthcare,
And it's inspiring to see companies tackling these challenges head on.
it's a good reminder that the stock market isn't just about numbers. It's
Yeah.
about innovation.
Ingenuity.
AI shaping the future.
Well said. I think that wraps up our deep dive into potential stock splits in 2025.
I think so. We covered a lot.
We did. Stock splits, companies to watch, emerging trends. But, this is just a starting point for our listeners.
Right. Do your own research.
There's more not
for connect those
Those smart investment
shift
decisions.
align with your goals.
And most importantly, stay curious. The stock market is always changing.
Full of opportunities to learn and grow.
So keep exploring, keep asking questions, and never stop learning. Thanks for joining us.
See you next time.